Welcome along to the Deep Dive. Today, we're getting into something absolutely foundational in personal finance, the emergency fund.
Definitely.
We're not just talking definitions, though. It's really about why this is, well, pretty essential for feeling secure with your money.
Absolutely. You know, when people start getting serious about their finances, this is often like step one. It's that cushion, isn't it? For when things inevitably don't go to plan.
Yeah, exactly. Without it, a surprise bill can just, throw everything off track.
It really can. So, yeah, a vital topic.
Okay, so let's break it down. What actually is an emergency fund? And maybe just as crucial, what isn't it?
Right. So basically, it's a pot of money set aside just for proper, unexpected financial shocks. Think losing your job suddenly, or a big medical bill that comes out of the blue. Or maybe your car breaks down and needs a major repair, something you genuinely can't put off.
Unexpected and necessary.
Exactly. It's not for things you know are coming up, even if they feel a bit urgent, like saving for a holiday or buying the latest phone. It has to be a true, unforeseen emergency.
Got it. And why is it so important to have this cash separate and easy to get to? Why not just, stick it on a credit card if something happened?
Well, that's the trap, isn't it? Relying on credit cards or loans in an emergency means you end up paying way more in the long run because of the interest. It can pull you into debt right when you're feeling most vulnerable financially. An emergency fund means you handle the problem with your own cash. It protects your credit, sure, but more importantly, it keeps you moving towards your other goals.
Like saving for a house deposit or retirement. You don't get knocked backwards.
Precisely. It's about maintaining stability and, honestly, peace of mind.
That makes complete sense. Avoiding debt traps is huge. Okay, let's talk numbers. The general advice you always hear is 3 to 6 months worth of essential expenses. How is that figure decided, and what counts as essential?
Right, that 3 to 6 month rule of thumb, it's based generally on how long it might take someone to find a new job if they were made redundant, for instance, or recover financially from a significant event. Essential expenses means stripping everything back to the absolute basics. So your housing costs, rent or mortgage utilities, food, transport to work, minimum payments on any existing debts, insurance, that sort of thing.
So you really need to know your baseline spending.
You do. You need to track things for a bit to get a realistic figure for what you absolutely need each month to get by. And, if your income is less predictable, maybe you freelance or work seasonally, aiming for the top end of that range or even a bit more is probably sensible.
Tailoring it to your own situation makes sense.
Right.
But look, saving potentially 6 months of expenses can sound, pretty overwhelming for someone starting out. How do you actually get there?
Oh, it absolutely can feel daunting. But the key is focusing on consistency over speed. You build it bit by bit. Take a really honest look at where your money goes each month, especially the non-essentials, eating out, coffee, subscriptions you don't really use.
Finding those small leaks.
Exactly.
Yeah.
Cutting back even a little in those areas can free up, say, $25 or $50 from each paycheck. It might not sound like much, but it genuinely adds up over time. Don't try to do it all at once.
Right. Small, steady steps. And making it automatic probably helps stop you dipping into it.
Automation is brilliant for this. If you can, set up a split direct deposit with your employer, have a certain amount go straight into a separate savings account before you even see it, or just set up an automatic transfer from your main checking account to your emergency savings account, maybe the day after you get paid.
Out of sight, out of mind.
Pretty much.
Yeah.
You learn to live on what's left in your checking account, and the fund grows without you having to constantly make the decision to save. It removes the temptation.
Clever psychology. Okay, so the money's building up. Where's the best place to keep it? Needs to be accessible, right? But maybe not too easy to grab for non-emergencies.
That's the balance. You need it safe and liquid, meaning you can get to it quickly without penalty when you actually need it. High-yield online savings accounts are often a good shout. They usually offer better interest rates than standard high street banks, but the money's still readily available.
And still protected.
Yes, up to the standard deposit insurance limits, of course. Money market accounts can work too. The main things are safety, easy access, and keeping it totally separate from your day-to-day spending money. Definitely avoid putting your primary emergency fund into things like stocks or even certain types of bonds or CDs where you might get penalized for taking it out early or the value could drop just when you need it.
Liquidity is absolutely key then.
Yeah.
Got it. So we've covered the what, the why, how much, how to build it, and where to keep it. Any final thoughts?
Just one thing, maybe. While we talk about it for unexpected things, building this fund also helps you think differently about those costs that are predictable but just irregular, like annual insurance payments or maybe needing new tires for the car every couple of years. Those aren't quite emergencies in the same way.
They're predictable surprises, sort of.
Yeah, exactly. Setting up separate little savings pots, sometimes called sinking funds, for those specific things alongside your main emergency fund for the truly random disasters makes your whole financial setup even more robust.
That's a really useful distinction. Planning for the known irregular stuff and the unknown crises. It really drives home that this fund is more than just a savings goal. It's a core part of being financially resilient.
Couldn't agree more.
Well, that's about all we have time for on this deep dive into emergency funds. We really hope you found this chat helpful for your own financial planning.
Yeah, I hope it was useful.
And if you did find it valuable, we'd love it if you could like this, perhaps share it with someone who might benefit, and subscribe to the channel for more deep dives.